Welcome to EIS and VC Navigator, the podcast for UK venture capital. I'm your host, Brian Moretta. There's lots of concern about how AI will affect SaaS companies. But is the answer to invest in more deep tech? Ilian Iliev, CEO of EMV Capital, certainly thinks so. On today's episode, he discusses how AI is affecting both SaaS and deep tech, how his portfolio companies really use AI, and what AI means for protecting intellectual property. If you joined the podcast, don't forget you can subscribe through all good podcast services or players, or follow the link in the show notes. If you have any suggestions for future topics or guests, then you can email us at inquiries@harmanco.com. Without any further ado, enjoy the conversation with Ilian. So, welcome back to the podcast, Ilian.
Oh, Brian, it's been a few years.
You were actually the very first person I interviewed for the podcast, and we did it in person in the old days when people did these things in person. But that's 6 years ago now, which I can't believe. I can't believe we're going 6 years.
Well, the experience so traumatic that it took us 6 years to speak again.
No, it was delightful. It's just sometimes we just don't do the things that we should more often. But in case anyone missed that, could you remind people maybe how you got involved in venture capital?
Sure. So, it's probably a non-standard approach. I came at it from several aspects. One is I was doing a PhD focused on this sort of area, innovation finance, how we fund technological change and so on. I had also run a business in the industrial space before, a family-owned business. And separately, at the time I was in Cambridge and I was seeing all this wonderful, amazing stuff, all sorts of angels floating around and investing in these great companies. But basically, for a while, I was in the technology space working on IP-intensive projects. And what I couldn't help but notice or developed a investment thesis that what now we call deep tech investments, but basically what I used to call IP-intensive or science-intensive startups require a different playbook for investment to what at the time in the 2000s was starting to take off, digital SaaS models. Perhaps I would have made more money if I'd stuck to digital and SaaS. but that really intellectually that interested me because most of the impact in the world that we see is in areas, infrastructure, healthcare, energy, you name it, where the hard element is quite prevalent. And, why is the VC model not quite working as well there? And this has been a running thread throughout my career in this space of how we can make investment for these types of companies better. And since I'm unemployable, I decided to start one myself. So that's how we started EMV Capital.
So you mentioned EMV Capital. I think it's fair to say in the 6 years since we last spoke, it has changed, not quite beyond recognition, but certainly in a huge way. Do you maybe want to tell us a bit more about what EMV Capital is now?
Yeah, sure. So today, EMV Capital is a venture capital investment platform. We are AIM listed, so the code is EMVC. And we invest in deep tech and life sciences companies, mostly in the UK. We have some investments outside of the UK. We tend to come in at an early stage, pre-Series A, but also sometimes we do restarts and pivots and turnarounds. I think what's somewhat unique to our model is that we combine both an investment side as well as a corporate finance side, actually structuring the deals, and finally combining that with a value creation services side where for companies in our venture build portfolio, we actually get deeply engaged in helping those companies grow, putting in place talent, helping them with connections to corporates and so on. All VCs say they provide value added, and we say so as well. But it's a fairly hands-on approach of helping to build those ventures. In terms of the where EIS comes, which of course is very much your focus area, we have built an EIS investment syndicate working alongside our evergreen EIS fund, and this is how we deploy. With this differentiated strategy, we have grown from about 8 companies in 2020, and I think it was around £7-8 million under management to more than 50 companies now, in the portfolio, and more than 100 million in assets under management, of which 30 million plus is on balance sheet. So it's been quite a growth, and it's been a exciting journey.
Yeah, very exciting journey. And it's been good to see someone progressing from a very small start to something much more significant, and hopefully that's part of a longer or a journey onto something even bigger. So we were chatting about topics today, and one of the hot topics is kind of what's happening with software and AI and the sort of fears that this has kind of generated. So let's maybe set the scene a little bit. Why are people suddenly concerned about AI and B2B SaaS in particular, the software in general?
Well, I think as the big players in the AI space have developed, what I think we're seeing is, they started off with a generalist platform, and now those who are focused on enterprise, so that would be in particular Anthropic, Copilot, Google, those that have a greater focus on enterprise are starting to focus on verticals and niches. And a number have been affected, as you know, so certainly around creative, media, video, and so on, music. But if we want to call the serious or boring sides of the economy, so software seems to be the one that has been particularly affected by tools such as Claude and others that have really accelerated coding. And there's still obviously a debate on the quality of that. There was a headline today about how Amazon service went down because Amazon implemented some AI coding tools and it wasn't vetted. But there is no doubt that there is a massive fundamental change in the software industry about the speed and ease of coding with the support of AI tools. And while there are issues, this is already affecting how the industry works. So where is the whole death of SaaS thing coming? Well, my take on it is that it's coming from twofold. First of all, I don't think anybody at the moment is saying that this can be entirely automated with humans out. Well, some are saying it, but businesses still have humans as architects and guiding and so on. But where the issue is that basically if the ease of software development increases, it stands to reason that the barriers to entry of a SaaS business, which is not protected by physical elements, it's not protected by, or less protected by patents and other such barriers, the barriers to entry decrease, and therefore those businesses should be under pressure. Now, I think, as always, there's different ways of looking at it. My personal take on it is that within the SaaS or the software industry space, software is not going anywhere. If anything, the increased availability of software coding tools will improve software, and it will help to automate things further. But the cozy SaaS model is probably under a lot of pressure. Customers will expect SaaS companies to improve their pricing or to change their models. It is already happening. And ironically, I think the areas that will benefit more are the ones that perhaps VCs didn't like so much. Areas where regulation is important, where licensing, where audit of the tools and the data is important. So in healthcare, in defense, in cyber, mission critical infrastructure. So ironically, I think those are the areas that will be more protected from this trend. So again, it's not that software is that; it's the SaaS model itself is under threat.
Yeah, and I think picking up your point is that while it's not there yet, the direction of travel is pretty clear. I think everyone's agreed on that there will be AI is getting better, AI coding getting better, and for all we're saying, Amazon might have gone down today. In 12 months, 18 months, 3 years, pick your date, whichever you think, you'll be able to implement these tools probably with very little sort of human oversight. There won't be none, but there'll be very little. I think you're right to say it's not going away. I think what's not clear to me is the degree to which the B2B SaaS in particular is so deeply embedded in some companies that it's too hard to replace in a sense. And I think, whereas, you can imagine some consumer apps, maybe, consumers, maybe, they're simpler, they're more functional, more faddy. Whereas in B2B, the idea is that these were so deeply embedded into companies, it's so dependable, people, unless something's 20 times better, they're not going to replace it. I don't know what your perspective on that is.
Yeah, and we're primarily focused on B2B and as an also, but I agree with you. Just the barriers to the switching costs are much lower for a consumer than for a large conglomerate. And if you look at, let's say, if you look at Salesforce, I mean, Salesforce is not going anywhere. There was a great interview recently with Mark Bornaft, where he said, we haven't grown our staff, but we have grown our revenues. The pace of innovation is accelerating. So enterprise software players such as Salesforce have a great benefit because they're already so big and embedded that they can use this new wave to improve and further embed themselves and grow the moat. I think maybe if I change the topic slightly to where what we're looking at from the venture capital perspective. So we look at deep tech and life sciences companies, and of course everything has a software element right now. And I think there's something people haven't picked up on, perhaps, that while deployment of AI in large enterprises might lead to decreased team sizes, to job reductions, because things are automated, because friction is decreased, because things can be done more efficiently. I think for startups, there's a different dynamic. Startups are naturally resource constrained. They never have enough money, they never raise enough money, and so on and so forth. And the resources that they now have with the use of AI tools mean that to a large extent, or to some extent, the imbalance between their ability to get to market fast or to run a comms PR campaign and so on and so forth, actually the imbalance between them and enterprise is decreasing. So from our perspective, actually, there's a really exciting aspect here that the companies we back are able to accelerate their go-to-market for lower spend if they're cutting edge, if they're using tools in the right way.
Yeah.
And some of this stuff is trivial, that's okay. One of our businesses, a robotics company in the construction industry. So they went from ideation, identifying a new market segment, to creating cutting edge, really good marketing collateral to launch in a few weeks, whereas it would have taken longer to create the collateral and to find the budget and to get the quotes and so on and so forth. So, it might seem trivial, but cutting a few weeks here and being able to experiment at the lower biz dev marketing costs there, this really matters for these companies. They can get to clients faster. They can do A/B experimentation. So in some ways, the whole lean startup movement that was created around software, you could see in some ways that the deployment and the development of these tools across the hardware businesses, but the soft tools, the PR, the comms, market research, and so on, it can enable an acceleration of the innovation pace and the market testing.
I was going to say, there is a counter argument to that, in that it makes it easier for the company investing, but it also makes it easier for everybody else.
Yeah.
And that makes competition easy. It's easier to start companies, it's easier to develop. Competition is just in danger of being stronger because, if you can do good marketing, I can do good marketing too with the same tools.
Yeah, absolutely. And this is where we get into the core of, deep tech and life sciences, that at least where we focus on is companies that are already quite well protected by years and years of scientific research at universities and the IP around that and the know-how and trade secrets. And you could say that AI will accelerate scientific innovation and research, and I believe that, but it's not nearly in the same way that other aspects of social work is accelerated. It just takes longer to do scientific discoveries and to validate them and so on. So I think from that perspective, we think that our space, the IP intensive and to an extent hardware side is, yes, innovation will accelerate. Yes, to an extent, barriers to entry are decreasing. Certainly, transparency is increasing. For instance, it's much easier to identify obscure journal papers or articles or trade kind of precedents, but simply because it is physical artifact, there's more frictions, and if you've got frictions, the full impact of AI is lower, and that gives time for those companies to develop to one or another extent.
Yeah. I mean, the rent-a-human idea is around already, but I don't think that's going to exactly replace that.
Yeah.
So, coming back to this idea of scientific innovation, I think I've spoken to one or two people on this recently, and there's a feeling that AI can help development of ideas, but in terms of generating new ideas, it's not quite ready for that yet. Is that a fair impression?
What certainly we're thinking about is AI-enabled, AI-enhanced. Kind of the human is the pilot rather than the passenger, and AI helps to accelerate the innovation cycle or the deployment cycle. And certainly in the case of discovery, I think the availability of AI enabling tools or reasoning tools or kind of challenging tools, that should be helpful. It can be used in a way that can be helpful for scientific discovery, to accelerate hypothesis testing, to accelerate the testing of different molecules, and so on and so forth. It's just great new toolkit that should be welcomed by scientists. I think there are parts of the scientific machine or the academic machine that will need to change. So the current system we have there is, which affects the investment side, it affects the tech transfer, it affects the VC side. If you go plain vanilla in the scientific community, you try not to publish your research in the public domain until it's been accepted in a peer-reviewed journal article, and the patent filing might be related to when you've published and so on. And that's, in today's world, that's really slow. That system's really slow. It's also not, there's been an explosion of AI-authored slop that's clogging up the scientific review system, and of course then perhaps the scientific reviewers themselves are using AI. So that's at the same time, in terms of the Western progress of science, that peer review mechanism is so incredibly important in ensuring quality of science, which has permeations throughout the rest of the innovation system, that what's coming out of that scientific community is high quality, and then you can think about how you commercialize it. Mm-hmm. So I think at the moment in the scientific community, that's certainly friction that's slowing things down. The fundamentals must remain, but it needs to be developed in a different way. We have our own issues in the VC space in terms of waste of information and just how the whole deal flow analysis and tech transfer commercialization model works. That needs to be improved. If you look at it on a systematic basis, from original discovery through to first sale of a product, you are looking, if it's not software, you are looking at 4 years, 5 years. In the case of new drugs, 15 years, 12 years. That's insanely long in today's world, So this is where I would hope the emergence of these new tools can help each of these parts of the chain to accelerate. Now, from a venture capital perspective, if you can shave 2 years off the commercial development of a product or of a new platform or of a technology, that has massive IRR implications. If all of your exits can come 2 years, on average 2 years earlier, that's revolutionary. I mean, 6 months earlier would be nice.
Yeah. And if you can pull and start getting revenues, I mean, as you think about drug discovery, the difference, it may seem as outside, the difference between 8 years and 10 years may not sound much, but if you could get 10 years down to 8, that's an extra 2 years on patent, for example, or whatever, which makes a big difference financially. I mean, you mentioned about these areas of friction, and I think these are one of the key things in deep tech where people. So we had a guest on a couple of years ago saying already there's more AI generated molecules around than can be handled through the system in terms of sort of development and trialing and whatever. Is there a danger of sort of overload here where we've actually got too many good ideas?
I was reading yesterday an article from Harvard Business Review about the proliferation of work slop, which is that basically human-driven AI generates, it takes you 5 minutes to generate a paper, or it takes you a day to generate a molecule, but then it's humans on the other side that need to review it. So it's easy to generate the first draft, but then somebody needs to spend proper time reviewing it. So it's how do you handle this inflation of slop, whether it's scientific slop or work slop. Look, I think this is still an emerging technology and an emerging paradigm. So the filters are naturally starting to develop and being implemented. I think in these early stages of discovery, there is first the wow factor, like, oh my God, look at how quickly this press release got written. Now let me make it make sense. So I think we've gone past the wow factor. We understand these are really powerful tools. Now, the next challenge for us as enterprises, whether it's the companies we found or even ourselves as VCs and financial intermediaries, is, how to combine this immense power we have in our fingertips with high quality work and still the role that we have as human principals or pilots in this.
Yeah.
What's challenging, of course, is the speed of development. Some of the filters and processes we're developing now could be irrelevant till tomorrow, but we have what we have today.
And do you have any examples in your portfolio at the moment of people who are using AI in ways that might seem unexpected or innovative or different that you could maybe talk about?
I have, and I mentioned the example of the construction robotics company earlier, and I'll give you a few others. I think, so it broadly splits between, let's say, two camps. One is those that are using AI in the everyday task, and it might sound boring and trivial, but it's a hell of a lot of acceleration for companies that have limited resource. It means they can get stuff faster. It accelerates the roadmap. So for me, that's really exciting because things are just moving faster. And then there is those for whom AI is at the core of discovery, at the core of what they're doing. And both are exciting and just two different things. So if I start with the former, we've got a telehealth company, digital health company that is looking at using agentic AI to train coaching agents for their use base, so that people can be onboarded on systems much faster. Is that trivial or not? I mean, 4 years ago, it would have been science fiction. Now it's on the border of being trivial, but this is them really getting to enterprise level maturity by using the tools that they have and all the know-how and all the knowledge they have accumulated in the Q&As and so on to provide a better product at a lower price. I think other really interesting use cases we're seeing is around the use of AI to build patent landscapes. Now, this sounds totally geek domain. What the hell are patent landscapes? Can patents paint watercolor? But a previous business I built, Cambridge IP, at the time we were manually going through patent databases. Then we built some tools to develop that. And this was in the mid-2000s, not that long ago, for somebody my age. And a lot of that is automated now to the point where these companies can have access to freedom to operate analysis and patent analytical tools that only large enterprises had, that had huge IP teams. So again, it's the leveling of the field, that if you know you need it, you can really do it, We're seeing things around grant support, grant writing and grant reviews and so on. It has been traditionally, very important in getting non-dilutive finance for these companies. But again, there's ways of accelerating that and building an agent that has the database of what you've done in the past and kind of help you accelerate grant applications. So there's a lot of these sorts of use cases. And in fact, as a business, because of the size of our portfolio, we're looking at collecting the use cases of what our portfolio companies are doing and to find ways of disseminating that knowledge. So we're looking at serving our companies and for them to learn from each other because again, people are still innovating in the use of this tool. Now, if you go to the fundamentals of it, how you use AI for discovery, absolutely. I mean, we have companies in the portfolio that had already been doing sort of molecule discovery with the use of AI tools, but the tools are so much better now and faster that they can do more of that and they can do more pre-qualification. Or I think quite fundamentally, we have some companies that are using AI tools to accelerate and improve their regulatory and FDA submissions. And the FDA has a whole set of guidelines now about how you use AI for clinical trial.
Yeah, I've heard they are perhaps supposed to forward-looking regulatory organization now in that respect.
Yeah, no, and it makes absolute sense because, again, if you look at it with my economist hat on, if you look at where do things not make sense, or it doesn't make sense for a new drug that can be saving lives to take such a long period of time to make it to market, to start saving lives, but then there's explanation why. Well, the regulatory takes a long time and clinical trials take a long time because you want to make sure it's safe and so on and so forth. Well, each of these can be accelerated because each of these is around data. It's about information. It's about discovery and classification. So you can use AI to improve stratification of population for clinical trial discovery. If CRO costs in clinical trials decrease significantly.
Can you tell what CROs are, in case?
A clinical research organization. So if you're developing a new drug, this is who you give, many millions of pounds to run the clinical trial, to identify the patient population, write up the reports, and so on. And it is very expensive. It's a big industry, and it's a big industry for a reason. But again, if that can be, I don't want to say disrupted, but if that can be made fundamentally more efficient, it decreases the cost of getting a drug to market. The reason you have orphan diseases, that is to say diseases that affect a relatively small part of the population, they're lethal, people die, but you don't have drugs for them that are licensed. The reason that that's the case is because the economics of drug discovery make it very difficult to do drug discovery for orphan diseases. Well, you drop the costs. That stands to reason. Now, this all might sound theoretical, but actually for us, to bring it back to the investment level, in moments of fundamental changes as we're having right now, it is the small and nimble players that are able to capture those opportunities. And as an investor, we're looking out for these emerging cases, emerging opportunities from this whole mess all around us that can enable smaller, more nimble players to capture an emerging market niche or to be the disruptor in a part of an industry.
Yeah, I think that the small and nimble thing is intriguing because I think one of the some of the really big winners we've seen in AI are people like Microsoft or Salesforce, companies that already have established market positions, established presences. They've got resources to implement AI. They can bring it in gradually, or at least they can, or maybe or at least say we will implement it well enough that you don't need to take over. I'm not sure if there's an equivalent in deep tech where you would say, are people saying, well, Glaxo's going to do all this, so actually, they're going to produce resources, or can the small nimble still win out?
It's all about frictions. In economics, the reason you have institutions, the reason you have firms is because you have frictions, you have transaction costs. And where Google and Amazon and all the big players have been able to build these vast empires is because their models are massively scalable, in the way that we have seen over the last decade and a half. I think when it comes to hardware, you have natural limits of manufacturing certainly scales when you get there, but there's other limits in terms of the scalability of the business models. So it's not as scalable as SaaS. Now you could say that, and therefore it's less attractive as an investment proposition. But as we just saw in the early stages of this discussion, SaaS perhaps isn't a threat as well. So I think there's likely to be a lot more diversity and a lot more diversification in our side of the industry. There's a lot more scope for specialist players in whether it's in drug development or in medical devices or in plastic waste recycling, you name it.
Can we turn to IP for a moment, because you've got a big background in IP, and you mentioned a couple of times about patents and whatever. It's an area you have a lot of knowledge about, and you obviously invest a lot in IP-rich companies. That's kind of your ethos. How is AI impacting people's IP strategies? How do thinking about intellectual property and protecting that, and does AI make that harder, easier?
So first of all, the practice of IP management is incredibly conservative. I think while the tools have increased vastly, it is fundamentally a fairly conservative industry. There's a lot of good in it being conservative. You don't want your patent agent being the most exciting rock and roll player and so on. Perhaps in the spare time, you want them to be really good and very precise in that field. So in a sense, it stands to reason that there'll be a lag in the adoption and the impact of tools. Just the practice of IP is slower. However, again, it's all about information access and speed of analysis. If I go down the logic tree, the speed of writing of patents or reasonably decent quality patents is increasing simply because you can train an AI tool to do that. There's the slop aspect that it is easier just to work with an AI to write a speculative patent that then you send into the patent office and take up their time. So as with elsewhere with AI, the slop aspect of it will prove a challenge to institutions that are not built for that, patent examiners and so on, but that's also fixable with AI on their side. But I think for well-intentioned players, the availability of the tools should make it much easier, faster, and effective to protect your IP, because some of the time and resource constraints are not there. If you're a strong scientist and you understand what a patent is and what a patentable innovation is, with the help of your patent agent, it will be faster to write that patent. It will be faster to identify the prior art literature that is out there that should inform you. And it should be faster to identify if somebody is potentially infringing on your patents. If you push that to the limit, it may well lead to a greater further marketization of the patent landscape, the patent space. There's been many attempts of monetizing IP in a more fundamental way, and that's always proven difficult, in part because of information barriers and the cost of doing these things. As always, there is the however aspect, that in a world of a few years ago, when last look, I think there was 100 million plus patents globally. Well, if you go to a world of 1 billion patents or patent applications, where are you in that middle stack? Does it become fundamentally more difficult to assert patent rights because there's just so much more stuff out there? So I think it's around complexity. But in terms of the tools firms have right now, there will be, if they didn't think they had the budget to run a sophisticated IP strategy, they absolutely should. We have companies in our portfolio where we've identified what we call Rembrandts in the attic, IP that turns out is useful in another area, perhaps to pursue a licensing strategy. It's just becoming easier to open up more monetization strategies for your IP.
Okay.
And to see exactly where you are in the landscape. Now, we as an investor, perhaps we're a bit weird like that, but as an investor, we really pay a lot of attention to IP. Now, that's natural if you're in life sciences, but we do that across the piece. It's really important for us that the IP piece is strong and that the company has a strong plan. The good news is that the companies can run a professional IP strategy at a lower cost.
I mean, that all sounds positive. I think one of the concerns out there is to what extent, AI learns from patents effectively.
Yeah.
And maybe it's more concern for software. How do we know if AI is doing something that effectively breaches the patent? Is the output enough to breach the patent, or can if it's used stuff internally, is there a danger that somehow AI undermines patent protection?
Look, it's the maybe $1 million or $1 trillion question, right? In a way, we've been here before when digital rights management first emerged, Napster and other things that we were using when we were younger, and then they disappeared. But then came Spotify, and around Spotify, the whole system of how copyright in music is being used and elsewhere just got transformed to the point now where my son, working with Spotify, has listened by his 16th birthday more music than I had listened to or heard by my 40th birthday, and I like music, right? So he had there, first of all, what seemed to be a cataclysm in the early 2000s in the music space. That's it. The music industry is gone.
Mhm.
The disruptors came, the music industry adapted its IP management systems, and as a result, I think we're all better off with greater accessibility to music than ever in human history. So as the idealistic view, I think ultimately the system will evolve and it will find ways of monetizing IP consistent with what AI is doing. Again, the dystopian risk is that the rate of innovation and change is so fast that the infrastructure can't catch up. But we've been here before, and we've come out stronger. I think, at least if we take the example of music.
Yeah, so something people are getting. It's not a null question, but it's something that we have to hope that people are kind of on top of. So you mentioned about monetize IP, and I think that also gives rise to the idea of what is IP worth. And I think we've seen this idea, or certainly coming back almost to where we started. Software evaluations seem to have been hit a little bit. Does IP give a more sustainable valuations, a more resilient sort of valuation going forwards, or is that just too simplistic?
I mean, for us, it's a core part of the model, but why? Why would you spend money on filing a patent or continuing to protect your patents rather than gaining one extra salesperson in your business, rather than or rather than going to a conference and so on and so forth? The way we see it is, look, it is a fundamental part of the business model of commercializing technology in the industrial space, in the deep tech space, and in the life sciences space. So it's not the one or the other. You need both. The nightmare scenario always is that you build up the company, you get to first sales, markets notice you, and then you didn't do your homework around the company's IP strategy or patent protection or other aspects of IP, and that's, you've done the investment, but then on the exit side, the buyer finds it less valuable because they won't have that level of protection. But in terms of when you go into the nitty-gritty of it, there's like a whole set of questions and options. Why is it that you're spending? Is it for defensive purposes? Is it because you want to be offensive? In this specific industry, how patents are used over time, how it changes. I remember years ago, we did some research with Chatham House around renewables, and we found in the US companies, US engineering companies, were using something called the International Trade Commission, which it's a total misnomer. It's a foreign trade-focused patent court, which had a relatively low threshold of blockage, and you would have US companies using that to block foreign companies from entering in the US market. You can use IP or the lack of IP as a way of ensuring that people don't come into your market. It can be tremendously powerful. The other aspect of this is, if you're going to be exiting your company to a large OEM, large multinational, you as a small company might not be a target of patent litigation or licensing targets, but for sure they will be.
Yeah, people sue where the money is.
They have the pockets to either to defend themselves or to pay you compensation. So you just need to think forward. What's the exit? 2 years down the line, 3, 5 years, whenever it is. What is the exit opportunity? Now, drug companies, they have that to perfection, because for a drug company, without the patent, you have nothing. It's a chemical compound, and sure, there is some know-how. Ultimately, it can be re-engineered. It's when you come into other areas that are less thought of as patent being important that I think sometimes companies have a slightly naive approach.
Such as?
Well, for instance, we've seen some examples of software or medical device companies in the UK who had excellent engineering, excellent technology, but there was a misperception that, look, it's difficult to file patents for software in Europe under the European patent system and to an extent in the UK. Therefore, we're not going to do that. Okay, but your biggest market is in the US, and in the US, you do file patents for software. So, out of naivete, you've just potentially lost your biggest market, or you've opened up yourself to potential challenge once you do go into the US. or some other cases where, well, when could we possibly imagine going to South Korea or Japan? We're never going to operate in those markets. Let's just forget about those patent jurisdictions. Okay, but your buyer, your corporate buyer, may well come from South Korea or Japan, and they don't even have their domestic market. So it's this sort of, again, it should be in context. We're not patent first. We just want to make sure the companies have the right level of focus at the stage of development in this part of their business.
Yeah. I can imagine that's a challenge, as you say. So people often come to this sort of fairly naively, but there's definitely value to be created if they do it properly.
Absolutely.
What I'd like to do now is turn to our favorite questions.
Yeah.
So what was the most recent publicly announced investment you made, and why do you make it?
Last year, we invested in a company called AMR Bio. So AMR Bio was formed through the acquisition of the assets of a company called Destiny Pharma, which was AIM listed. And it's interesting and exciting for us for several reasons. First of all, it showcases our venture build portfolio and model, where we look at really interesting and exciting businesses that have built a great technology and a great market, and for one or another reason, not necessarily through insolvency, for one or another reason, need a restart. And
yeah, because your venture building, I think, is different from what other people might say. Usually when people think of venture building, it's kind of, right, you ideate, you get a couple of people, you start a company. You're not really doing that.
Well, I think what you described makes a lot of sense in the software space, but in our space, where it takes many years, sometimes a decade, for a scientific platform or technology to mature, what is interesting for us is the technology and the platform has matured, and there's multiple other use cases or a different approach to the same use case that can be tried. We also talk a lot about capital efficient investment approach, because we recognize the fact that it can be quite capital intensive to build deep tech and life sciences companies. So what we look at are, what is the formula? How can we make that lighter, whether it's through the use of grants or other non-dilutive finance, or by sequencing the development in a different way. And we feel we've built a bit of a track record in that space. We've done this a few times in a row now. And with MR Bio, it's a similar example. The team had previously, in terms of what it does, it's in the space of antimicrobial resistance, and it's or antibiotic resistance, and it's an antimicrobial gel they've developed that can be used in pre-operation environments. There's a big problem in the hospital of in the operating theater that pre-op, post-op, you can pick up infections, and people die despite a successful operation. And their gel is that's in clinical development is quite interesting and successful. They had a successful phase 2 trial, and with the team we said, look, actually, including through the emergence of AI, there is a more capital efficient way, we believe, of getting to the next stage, whether it's through the phase 3 trial that they had planned, or other applications of this technology, such as in dermatological. From a social perspective, this technology might not have made it out, and we found a way to give the technology another chance for a really socially important application, which is around hospital infections and patient care.
Certainly sounds like a good objective. Hopefully it works out. Do you want to tell us about a time you failed and what you learned from it?
Well, where do you begin? The first thing to say is, to operate in our space, you have to be this Frankensteinian sort of combination of both optimists and extremely paranoid. And optimist because if you don't believe this thing can be successful, well, we shouldn't be in business anyway. And paranoid because when it comes to implementation, just anything can kill you. So you have to be really detail focused and so on. So there's been multiple errors, should we say, or errors of judgment, and we built in the past. Maybe I'll say I'll pick two of them. One is around the IP business I mentioned, where I believe we had quite a cutting edge platform with good market recognition and so on and so forth. We were fairly successful, but what stopped us from being as successful as others was we couldn't make up our minds what's the business model. Is it a software model? Is it a consultancy model? And as a result, we tried to run both at the same time. And what happened is that, again, while it was reasonably successful, we got some good recognition, and I'm proud of what me and my team achieved there. It wasn't a breakout success that it could have been, for instance, if it had focused on the product side. And that's a lesson I often tell to the entrepreneurs and CEOs I work with. I say, look, you gotta choose, you gotta pick. I know it's difficult. I know it's really, really difficult. But you have to choose the one or the other. You can't run both businesses under the same roof. You're too small. You have to focus on the one thing. So this is around focus. There's other aspects in terms of where we have missed a market change where, okay, the model is working quite well and cash is coming in, but there is a big change coming in the horizon. Yeah, but we're making cash now. I can't believe it's going to be disrupted. And it is. So it is, again, in a way, you can never predict these things absolutely. But what we try to do in our business is, working with our companies, is really drive for scenario planning. And okay, if this happens, what is plan B? What is plan C? If the fundraise you're so optimistic about doesn't happen and or gets postponed by 6 months, how do you preserve the business to make it to the next stage?
Mm-hmm. Yeah. That little bit of paranoia can go a long way, as you say. So as regular as this know, I'm an avid reader and always looking out for ideas, and I think you are too. So anything out there you like and would recommend?
I saw you asked me that question. As a result, I've got a stack of books here, and I've got a kind of this weakness or disadvantage that I read in parallel several books, not at the same time clearly, but I'll dip in one, dip into the other. So, so I think what I want to flag, and as a originally Bulgarian national, I can't resist by plugging some of my countrymen. But there's a guy called Georgy Gospodinov who got the Nobel Prize in Literature a few years back, and there's a book called Time Shelter that is an absolutely excellent read. And the whole thesis of this book is you have these entrepreneurs that have taken different cities in Eastern Europe and that are frozen in time, and allow people that have the choice. Look, do you want to live in the 60s or the 70s or the 80s? And you have the right records and the TV stations going, so on and so forth. So it tells you something of the human condition, but also I think it's in a different way. It talks to the risks we have in today's world of having these segmented bubbles, whether it's reinforced through social media or otherwise, that you either live in different times or different bubbles that don't talk to each other. But it's a wonderful read. I've been rereading Yuval Harari's 21 Lessons for the 21st Century. Now, he wrote that before the latest wave of AI tools came out. But a lot of the topics that he raises, kind of the existential threats and the opportunities that come out, are quite interesting. Now, of course, me being the geek I am, I'm sort of going through these chapters and identifying business ideas. This is this is the business model that can emerge out of this particular existential risk. And the final one is I'm doing a parallel read of Andrew Roberts' Churchill biography, which is a bit of a monster, and Rory Stewart's Politics from the Edge. And it's both sort of a kind of a longitudinal study of British politics, the one pre-World War II and before, and the other one today. So it's a great read in terms of the continuity in British culture and British politics, says the Brit, but also the changes that have happened in that period.
Yes. Well, all those are new to me. And I've got to admit, I've only knowingly read one Bulgarian author who happened to live in Edinburgh, so I knew her. So I'll definitely have to get that as something that's expanding my reading list a little bit. So final question, what do you wish you knew when you started venture capital that you know now?
I'll tell you, I'm going to be a politician and answer the question I want to answer. The thing I'm very happy I didn't know is how hard it is and how long it takes. It is really hard to make any business successful and to find the right product market fit. And if you go on LinkedIn, LinkedIn is my LinkedIn news feed is filled with instant successes. But of course, for any meaningful success, and LinkedIn most perhaps doesn't have, it's mostly less meaningful ones, but for any meaningful business success, there's many, many years of work until things clicked together. So I think I'm really glad I didn't know, or perhaps I did know, how long it takes to build something successful in a space like this until you get the right fit and things start moving forward. What I'll also say is that what I did know, I suppose I expected to know, is the incredible satisfaction that you feel as a creator once things work together in gel, once perhaps the investment thesis is proven right, once all the hard work that you've done alongside the entrepreneurs or business, and it clicks and it starts moving forward. There's nothing like that. And that's I think why we work in the startup space rather than in a big corporate, a large organization. It's this feeling of satisfaction when things work.
Yeah, yes. We like that satisfaction when things come together. So if anyone wants to find out more about what you're doing at EMV Capital, where should they go?
Well, to the website, of course, where you can find out more about our portfolio, also the newsletters and the thought leadership pieces we're writing. LinkedIn, of course, has a good summary of the news of the portfolio and what's happening elsewhere. But also, we're running a frequent number of virtual Meet the Portfolio events through online webinars, open both for our PLC shareholders and the rest of our investors. There's one coming up next week, which is probably before this podcast is published. But if you go on our website, you will see when we have these events, and I very much look forward to meeting your audience.
Well, hopefully they will follow up and check you out. So thank you very much for coming on again today, Ilian. It's been great to chat, and let's not make it 6 years next time.
Absolutely. Thank you, Brian.
I hope you enjoyed Ilian's perspective on how AI is affecting the venture capital industry. We're in the middle of a transformation, so maybe we do need to look at venture capital a little bit differently. As usual, you can get full show notes with links at harmonandco.com/podcast. You can subscribe to podcasts on all good podcast services and players, or through the link in the show notes. If you like what you hear, then please tell a friend or colleague, or give us a review on your favourite podcast app. We can be contacted at inquiries@harmonandco.com. Thanks for listening, and we'll be back in 2 weeks' time.